You wake up early. Grab your coffee. Sit in traffic. Clock in. Clock out. At the end of the month, you check your paycheck. And for a second, you pause. Because something feels off. You worked hard. You showed up every day. You did everything right. So why does your bank account still feel empty? Because before your paycheck even hit your account, taxes already took a bite. A big one. Now here's the question nobody likes to ask. How is it possible that someone making $50,000 a year ends up paying a higher tax rate than someone worth $50 billion? That sounds crazy. It sounds unfair. It sounds fake. But it's real. And no, this video isn't about hating billionaires. It's not politics. It's not motivation. This is about understanding how the tax system in the United States actually works. Because once you see the rules, a lot of things suddenly make sense. And yeah, it might piss you off a little. How taxes work for regular people. Let's start with normal Americans. If you make money from a job, you're playing the hardest version of the game. Say you earn $70,000 a year. Sounds decent, right? But here's what hits you. Federal income tax. State income tax. Social Security. Medicare. Before you even touch your money, it's already gone. That's called withholding. The government doesn't wait. They don't trust you to pay later. They take it up front. No strategy. No flexibility. No loopholes. This is earned income. And earned income gets taxed the most. Let that sink in. Now remember this. Because billionaires don't make money this way. Not even close. Billionaires don't live on salaries. Here's where most people get it wrong. They think billionaires get rich because they earn more. That's not how it works. Billionaires don't earn money. They own assets. Jeff Bezos didn't get rich from a paycheck. Elon Musk's salary has been close to zero. Mark Zuckerberg takes a symbolic salary. So how does their wealth grow? Stocks, companies, equity, real estate. And here's the key rule. You are taxed on income, not on wealth. If your stock goes up in value, but you don't sell it, there is no tax. That increase is called unrealized gains. For example, you buy a stock at $10. It goes to $100. On paper, you made $90. But unless you sell it, you owe zero tax. Now scale that up. When Elon Musk's net worth jumps $10 billion in a year, he doesn't write a tax check for that. Wild, right? But here's the thing. That's not a loophole. That's the rule. Buy, borrow, die. Now here's where things get interesting. Instead of selling assets and triggering taxes, billionaires borrow money. They walk into a bank and say, I own billions in assets. Use them as collateral. Give me a loan. The bank doesn't hesitate. Why? Because billionaires are low-risk clients. Now here's the kicker. Loans are not income. Loans are not taxed. So they get millions in cash. Without paying taxes on it. They use that money to buy homes. Travel the world. Invest more. And fund their lifestyle. This strategy has a name. It's called buy, borrow, die. Buy assets. Borrow against them. And die without selling. When they die, their assets pass to their heirs. And the tax basis resets. Translation. A massive chunk of tax is never paid. That's not illegal. That's not shady. That's how the system is written. Real estate, the tax cheat code. If there's one thing wealthy people love, it's real estate. And for good reason. Real estate comes with something called depreciation. On paper, the government allows owners to say, this building is losing value over time. Even if, in real life, property prices are rising. And rent keeps going up. So a billionaire can earn millions in rent. And still report a loss on paper. Loss means lower taxable income. Sometimes, zero. Meanwhile, you buy one house. And still pay property tax, income tax, and maintenance. Same country. Different rules. If this sounds confusing, good. That means you're actually paying attention. Capital gains versus paychecks. Here's a simple truth. The tax system rewards ownership, not labor. Earned income can be taxed up to 37%. Capital gains, usually 15 to 20%. So the message is clear. Work for money, pay more tax. Own assets, pay less tax. That's why Warren Buffett once said, "I pay a lower tax rate than my secretary." That wasn't a joke. That was reality. Why the system exists. To be fair, this system wasn't designed to be evil. Lower taxes on investment. Encourage people to invest. Investment grows businesses. Businesses create jobs. That part works. The problem is scale. When you already own assets, the system multiplies your advantage. When you don't, you pay full price. That's not a bug. That's a feature. Who really feels the pressure? Poor Americans feel it through sales taxes and inflation. Middle-class Americans feel it through income taxes and payroll taxes. The wealthy avoid it through structure and strategy. That's why so many people feel like, I'm doing everything right, but I'm still falling behind. It's not laziness. It's math. Final reality check. This video isn't telling you to hate the rich. It's telling you to understand the rules. Because money doesn't move randomly. It moves through systems. And if you don't understand the system, you'll always feel stuck. The game is legal. It's just not fair. Once you see it, you can't unsee it. If this made you think, stick around. No hype. No fake motivation. Just real money systems. Explained clearly.